come back with me. Don't forget to like, share, comment, and subscribe. Meanwhile, the impasse over a revival of the Iran nuclear deal is also continuing to keep that country's export from fully returning to the market. Still, both Brent and WTI are headed for their worst quarterly drop in percentage terms since the beginning of the coronavirus pandemic. The dollar remained firm near a two-decade high versus major peers on Tuesday, making oil more expensive for holders of other currencies amid a slew of central bank meetings around the world this week. The U.S. Federal Reserve on Wednesday is likely to raise interest rates by another 75 basis points to rein in inflation. While other major economies are tightening, China, the world's second largest oil user, on Tuesday left its benchmark lending rates unchanged as it retreats to banks supporting its sluggish economic growth against the weakening yuan. The Bank of England will announce rates on Thursday. Fear of aggressive central bank tightening are still driving concerns about a quickly weakening global economy and pressuring crude price, said Edward Moya, senior market analyst at OANDA, in a note. U.S. crude oil stocks are estimated to have risen last week by around 2 million barrels. A retail poll showed U.S. vehicles travel in July fell 33% from a year earlier, dropping for a second month. The U.S. Energy Department will sell up to 10 million barrels of oil from the Tata-Gas petroleum reserve for delivery in November, extending the timing of a plan to sell 180 million barrels from the stockpile to temple prices. Farming and food firms could lose up to a quarter of their volume by 2030 if they do not adapt to new government policies and consumer behavior tied to climate change. United Nations affiliated campaigner said in a new report research to be presented on Thursday looked at how 40 big companies, including agricultural producer and food retailer, could fare under scenarios tailored to reducing emissions, such as if government impose carbon emissions prices or if consumers reduce their consumption of meat. The study seen by Reuters News found the company's follow would decline by an average of around 7% by 2030, equivalent to some $150 billion in investor losses if they did not adopt new practice. At the same time, businesses like plant-based meat and forest restoration over the same companies big new opportunity. The report states the reports do not same specific companies, so it is not taken as investment at fit. A campaign representative said it is being published by Rise to Zero, a UN-backed campaign to address climate change. Researchers used data from vivid economics, part of consulting from McKinsey and CO. The report will be presented at Climate Week in New York, a series of events tied to the gathering of world leaders in the city. Bakers said the findings show the importance of previous calls for investors and companies to eliminate deforestation tied to products like sandal, palm oil, and soy. More than 100 global leaders last year pledged to halt and reverse deforestation and land degradation by the end of the decade. The is taught. Nature risk is fast becoming an integral factor to investment risk, said Peter Harrison, Chief Executive of Sector Peak in statement sent by a Race to Zero representative. This story quotes paragraph 7 to South Group when deforestation eliminated. Okay, maybe that's all from me. Thanks for watching. Don't forget to like, share, comment, and subscribe.